Hi, everybody. Happy New Year, and thanks so much for joining me. Before we get started, please take a second to click subscribe to my channel to keep up with all of my latest investing and personal finance content. And please check out the link you see on your screen for a message from our sponsor, the Motley Fool, where you can get the top 10 stocks to buy right now. So, the recent stock market downturn has produced a lot of, I'd call it accidental high yields in the market, as in high yields that just didn't exist for a while. 4% and higher, 4% was considered a very high dividend yield just a couple of years ago. And now you regularly see stocks with 6, 7% or even more that are totally sustainable. So I have my friend Tyler Crow, and before I turn the mic over to him, I'm going to talk about one that's on my radar that I know he's not a big fan of, because it's real with a stock like this. It's really important to get both sides of it. So it's Innovative Industrial Properties. Ticker symbol is IIPR. And it's known as the Marijuana REIT. It's a real estate investment trust that owns a few different types of properties, but all occupied by tenants in the legal cannabis industry. Now, are a few compelling investing theses here. Tyler even has to agree with that. The legal market is expected to roughly double in size by 2026, as a lot of states have passed cannabis legislation, but hasn't gone into effect yet. So the market size is clearly growing. The leasing model is great. Innovative Industrial Properties tenants sign long-term triple net leases. The average terms are between 15 and 20 years. And the portfolio is 100% leased because they structure it that way. They lease new properties that they build or they lease new properties with specific tenants in mind. The stock kind of traded like a meme stock in 2020 and 2021. Just like every other marijuana stock in the market did. It rose by about 300% from the beginning of 2020 to its peak in 2021. It's down about 65% since. It trades for a pretty compelling valuation of just 13 times FFO, the REIT version of earnings, and it has a 7.3% dividend yield. That it is a high payout ratio, but it is covered by the profits the company's making. So one big risk I see is tenant turnover. If a tenant goes bankrupt or has to vacate the properties, there's a very limited base of tenants that Innovative Industrial Properties could put in its place. And that high payout ratio kind of scares me, but I know Tyler has a few other risk factors in mind that investors should know. So why shouldn't I buy Innovative Industrial Properties, and what should I do instead?
Well, you kind of hit the nail on the head there. And it's counterparty credit risk when it comes to these companies. As much as there's, as you're mentioning, the opportunity for this industry to grow. The thing that would make me more nervous than anything else is the fact that its current tenant, number one of its current tenants is already defaulted on some of its leases. So there's the use case of what could possibly happen. We've seen that there's even some rumors that another one is about to default because it's in some issue. The whole reason that these companies do these net lease backs, the growers themselves, is because they don't have access to capital, and most of them are not free cash flow positive businesses in the first place. So these are infusions of cash that they're using to grow their businesses with the sale leaseback agreement. So you're kind of buying property only to take that cash back slowly through leases anyways, because it's a cash burn industry right now. And so as lucrative and ability for the market to grow, that doesn't necessarily translate to the business actually being able to grow itself profitably. And should its current tenants default, or a couple of them, because of poor counterparty credit risk, you could see some significant declines in tenancy, declines in FFO that would lead to a dividend cut. And so that's, to me, why I think you should probably hit the pause button on this one for a while. Now, conversely, let me give you an idea instead. This company is called Enterprise Products Partners. They are an oil and gas midstream company. So basically, midstream means pipes, processing facilities, logistics terminals, crude import, export terminals, things like that. It's a, like you said, with long-term net lease contracts, everything that more than 90% of what Enterprise does is on take or pay or sorry, fee-based contracts, which basically means that you get to use my pipeline or my processing facility at a set fee rather than, taking a percentage of profit based on commodity prices. So it's a very relatively stable revenue model in a volatile commodity industry. And most importantly, this company has just been a good steward of shareholder capital for a very long time. Has a 7.8% dividend yield today. And just to give an idea of, like, you think of slow growth, whatever kind of business, whatever. Since its IPO in 1998, it has a total return of 2,160% compared to a total return of 420% for the S&P 500. When you have a high yield through the up and downs of a market, it can provide a good, stable floor of return that leads to big total returns. And this is a company that has put an emphasis on paying that dividend and paying it securely without over leveraging, keeping a modest balance sheet, and just like I said, good stewards of shareholder capital. And when you're in a business like that, it matters more than anything else.
Hey, so this is not just an income play. This is a lot of upside potential as well.
Yeah, especially at, I think, its highest yield in 15, 20 years.
I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. So go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 338% as of 12/21/2022 and are measured against the S&P 500 returns of 110% as of 12/21/2022.